sure anyone who pays income tax in India has heard about Section 80C of IT Act. You can claim deductions of up to Rs 2,20,000 or even more if you combine it with HUF using Section 80C. In this video, I am going to briefly discuss about all the investment options through which you can claim these deductions and save income tax of up to Rs 66,000. Before we start though, if you are new to our channel, please consider subscribing to get notified whenever we upload a new investment related video. So let's get started. The tax you pay depends on your age, gender, sources of your income, your investments, the donations that you make, and many other factors. First type of deductions depends on your source of income. Depending on whether your income came from salaries, capital gains, housing property, proprietary business, or other sources, you can claim different deductions according to IT Act. Second type of deductions, known as Chapter 6 deduction, can be claimed on gross total income. These deductions can only be claimed on part of gross total income which is not taxed at special rates such as capital gains or money won in lottery. Section 80C of IT Act 1961 allows individuals and HUFs to claim tax deductions of up to Rs 1,50,000 on their taxable income. You can also claim additional deductions of up to Rs 70,000 using two subsections, 80CCD and 80CCF. Now let's discuss some investment options that qualify for these deductions. Public Provident Fund (PPF) is a long-term retirement cum saving plan with a minimum lock-in period of 15 years and can be extended in blocks of 5 years. Your contribution to PPF qualify as a part of total investment of Rs 1.5 lakh for which you can claim deduction under Section 80C. Your returns are guaranteed and completely tax-free. The current interest rates are 7.1%, which are updated quarterly. Unfortunately, NRIs and HUFs cannot operate a PPF account anymore. Your contribution to Employee Provident Fund (EPF) qualify as a part of total investment of Rs 1.5 lakh for which you can claim deduction under Section 80C. The minimum lock-in period is 5 years. The returns are guaranteed and completely tax-free. The current interest rates on EPF is 8.5% and it is updated annually. Investments in National Savings Certificate or NSC offered by Post Office qualify as a part of total investment of Rs 1.5 lakh for which you can claim deduction under Section 80C. The returns are guaranteed, however, they are taxable. The current interest rates on NSC are 6.8%. NRIs and HUFs cannot invest in NSC. You can invest in Sukanya Samriddhi Yojana or SSY on the name of a female child under the age of 10 years. If you are her parent or legal guardian, your contribution to SSY qualify as a part of total investment of Rs 1.5 lakh for which you can claim deduction under Section 80C. The lock-in period is 21 years. The returns are guaranteed and completely tax-free. The current returns on SSY are 7.6%. NRIs or HUFs cannot invest in SSY. Resident individuals, NRIs or HUFs can all claim deduction for investment in 5-year tax-saving fixed deposit under Section 80C as a part of total deduction of Rs 1.5 lakh. The current yields are up to 6.5%. The returns are guaranteed, however, they are taxable. Citizens over the age of 60 can claim deduction under Section 80C for investment in Senior Citizen Savings Scheme (SCSS) as a part of total deduction of Rs 1.5. The lock-in period is 5 years and can be extended only once for 3 years. The returns are guaranteed. However, they are taxable. Equity Linked Savings Scheme or ELSS is a tax-saving mutual fund investment option with a lock-in period of 3 years. Individuals, NRIs or HUFs can all claim deduction under Section 80C for investment in ELSS as a part of total deduction of Rs 1.5 lakh. As ELSS is a market-linked product, the returns are not guaranteed and the returns are taxable. Both resident individuals or NRIs can claim deduction for premium paid on life insurance policies and investment in unit-linked insurance plans or ULIPS under Section 80C as a part of total deduction of Rs 1.5 lakh. These benefits can be claimed for self, spouse or even dependent child. The gains from these investments are tax-free under Section 10DD. Investments in approved infrastructure bonds with a lock-in period of 10 to 20 years qualify for deductions of up to Rs 20,000 under Section 80 CCF, which is over and above the deductions of Rs 1.5 lakh and Rs 50,000 under Section 80C and Section 80 CCD respectively. Resident individuals, NRIs or HUFs can all claim deduction for payment towards the principal amount of home loan or payment of stamp duty and registration of housing property under Section 80C as a part of total deduction of Rs 1.5 lakh. Both resident individuals and NRIs can claim deduction for payment of tuition fees of up to 2 children for full-time course within India under Section 80C as a part of total deduction of Rs 1.5 lakh. Both resident individuals and NRIs can claim deduction for contribution to Tier 1 National Pension System or NPS account under Section 80C as a part of total deduction of Rs 1.5 lakh. You can also claim additional deduction of up to Rs 50,000 under Section 80 CCD for investment in NPS, which is over and above the 1.5 lakh deduction under Section 80C. The lock-in period for NPS is till the age of 60 and you can withdraw up to 60% amount at that time. The returns from NPS are completely tax-free. Resident individuals can claim deduction for investment in different pension plans under Section 80C as a part of total deduction of Rs 1.5 lakh. Here is a brief comparison of different kinds of investment options we discussed. The options available for NRIs and HUFs are fairly limited. Nevertheless, there are some very interesting options available for all kinds of investors. Now that I have discussed different investment options to claim deduction under Section 80C, which one is the best for you? There is not a single investment option which is best for everyone. For instance, if you are an NRI, you are not eligible for some of the options that I discussed. So here is what I would recommend. First, compute all the investments that you have to make or have already made without considering the tax benefits such as payment of fees of your children, home loan repayment, contribution to EPF or life insurance policies. Then you can calculate how much additional investment you need to make to claim maximum tax benefits. In case your investments already exceed the maximum tax benefits but you still want to make some investments, you can consider claiming these deductions through your HUF account or your spouse's account. You should also consider investing in NPS and infrastructure bonds to claim additional deductions under Section 80 CCD and 80 CCF respectively. If the new tax brackets suits your tax requirements, none of the investment options that I discussed are eligible for deductions, except deduction of Rs 50,000 for investment in NPS. If you like this video, smash that like button and share the video with your friends and family. Also, links to videos on different investment options that I discussed in this video are available in the description below. Thank you.